What if I told you that a single football match or Olympic event can change the economy of an entire city within days? Now think about this carefully. Hotels get fully booked, restaurants raise prices, streets become crowded with tourists, and billions of dollars start moving through the local system almost overnight. But here is the real question. Does this money actually stay in the city, or does it leave just as fast as it comes in? In this video, we are going to break down how major sporting events impact local economies and reveal what really happens when the world's biggest sports spectacles arrive in a host city. Let's get started. 1. Short-term economic boom. When a major sporting event arrives in a city, the first thing that happens is a sudden economic explosion. This is the massive, short-term boost that most people see immediately. Hotels become fully booked, and room prices often skyrocket due to the sudden surge in demand. Restaurants experience long queues, food sales rise significantly, and local transport systems see heavy usage as thousands of tourists move around the city. Small businesses like souvenir shops, street vendors, and local services also experience a sharp increase in their daily earnings. For a short period of time, the total cash flow moving through the city increases rapidly. The event also creates thousands of temporary jobs to keep things running smoothly. Security staff, cleaners, event organizers, transport workers, and catering teams are all hired in massive numbers to manage the large crowds. For many local workers, this becomes an excellent short-term opportunity to earn additional income. From the outside, it looks like the city is experiencing an undeniable financial boom. Media coverage always highlights this positive impact, showing packed stadiums and busy, vibrant streets. However, this boost is entirely temporary, and once the final whistle blows, most of these activities return to normal levels almost immediately. For businesses, this shows how demand spikes can create short-term profit opportunities, but they are rarely sustainable in the long run. Major sporting events act like powerful economic accelerators, but they only operate within a very limited time window. 2. Real costs behind the events. While the short-term boost looks impressive, the real financial picture becomes much more complex when you look under the hood. Hosting a major sporting event requires massive upfront investment in stadiums, transportation systems, security, and city infrastructure. These multi-billion-dollar costs are often covered heavily by public funds. This means that everyday taxpayers in the host city or country are the ones indirectly paying for the event preparation. This massive allocation of capital frequently forces local governments to divert funds away from essential public sectors like healthcare and education. Consequently, citizens often find themselves paying for sports entertainment at the expense of their own community's basic welfare needs. At the same time, local economies have to deal with something known as the substitution effect. Regular tourists, who would normally visit the city to spend money, often completely avoid the area during major events due to high prices, overcrowding, and traffic issues. This means that while event-specific tourists increase, regular tourism sharply decreases, balancing out much of the expected income. Another major hidden issue is what economists call money leakage. A massive portion of the spending during the event goes directly to international organizations, global sponsors, hotel chains, and external corporate companies rather than staying inside the local economy. For example, ticket revenue, broadcasting rights, and major sponsorship deals almost always flow outside the host city. This drastically reduces the real, long-term economic benefit for local communities. From a financial perspective, this proves that not all revenue generated during mega events remains in the host economy. While the event looks incredibly profitable on the surface, the actual net gain can be much smaller than expected. In many unfortunate cases, cities end up investing far more money than they ever recover. 3. Infrastructure legacy and white elephants. One of the biggest promises made by major sporting events is long-term infrastructure development. Organizers often claim that host cities will benefit for decades after the event ends by upgrading their urban landscapes. In some cases, this turns out to be true. Cities may receive much-needed improved roads, upgraded airports, better public transport systems, and modern urban facilities that benefit citizens daily. These massive improvements can enhance daily life and significantly increase long-term tourism potential for the region. However, there's also a major downside to this rush of construction, famously known as white elephants. This term refers to massive stadiums or large facilities that are built specifically for the event but are rarely, if ever, used afterward. These giant structures require incredibly high maintenance costs but generate virtually zero income after the tournament ends. In many cases, they quickly become permanent financial burdens for local governments. This creates long-term pressure on public budgets, especially when the initial construction costs were heavily funded through public debt. On the positive side, some forward-thinking cities successfully repurpose this infrastructure for future events, concerts, or local sports leagues. But achieving this success depends entirely on smart planning and a solid long-term strategy. From a business perspective, this highlights the absolute importance of sustainability planning in large investments. Not every large project guarantees long-term value unless it is carefully designed for future use from day one. 4. Global branding and tourism impact. Despite the undeniable financial risks, one of the strongest long-term benefits of hosting a major sporting event is global exposure. When a city hosts events like the World Cup or the Olympic Games, it is broadcast directly to billions of viewers around the world. This creates a deeply powerful marketing campaign for the city itself, beautifully showcasing its landmarks, culture, and future tourism potential. This massive media spotlight effectively places lesser-known cities directly onto the global tourism map overnight. It opens up new doors for international trade partnerships and sparks real interest from foreign real estate investors looking for emerging markets. As a direct result, international interest in visiting the city often increases dramatically after the event ends. Hotels, airlines, and travel companies continue to benefit from long-term tourism growth driven by that initial global visibility. This unique type of global exposure is incredibly difficult, if not impossible, to achieve through traditional marketing campaigns. However, this positive impact is never fully guaranteed. It depends heavily on how well the city manages its public image and its infrastructure during the live event. If the event is successful and runs smoothly, it can significantly elevate the city's global reputation for decades. From a business angle, this is a massive form of long-term brand investment for cities. Instead of selling a standard product, the city is effectively selling itself as a premier global destination. This makes hosting a major sporting event a fascinating combination of aggressive economic strategy and global marketing. Cities that manage this effectively can successfully turn short-term events into long-term tourism growth engines. 5. Final economic balance. When all of these conflicting factors are combined, the true economic impact of major sporting events becomes highly complex. On one side of the scale, there is undeniable short-term growth in tourism, retail spending, and immediate job creation. On the other side, there are incredibly high construction costs, mounting public debt, and corporate revenue leakage that severely reduce the overall financial gain. This reality shatters the myth that hosting a major tournament is a guaranteed shortcut to massive civic wealth. Instead, it proves that sports economics require a high level of fiscal discipline that many emotional bidding committees completely lack. The true outcome depends entirely on how well the host city manages its planning, infrastructure, and post-event usage. Some cities walk away benefiting long-term through improved infrastructure and a boosted global brand. Others struggle deeply with massive debt and completely underused facilities long after the event ends. This creates a mixed economic reality rather than a simple profit or loss situation. For policymakers and global businesses, the key lesson to take away here is balance. The immense short-term excitement of hosting must always be matched with realistic long-term planning. Without this careful balance, even the biggest and most celebrated events can easily become financial burdens instead of great opportunities. Major sporting events are therefore not just pure entertainment. They are complex economic systems filled with both massive opportunity and serious risk. And there you have it, the real truth behind how major sporting events impact local economies. What looks like a simple celebration of sport is actually a powerful mix of tourism, investment, infrastructure, and global marketing working together behind the scenes. Some cities gain incredible long-term benefits, while others face intense financial pressure long after the spotlight fades away. If you found this video helpful and interesting, make sure to like, share, and subscribe for more deep insights just like this. Don't forget to comment below and let me know which sporting event you think gives the absolute biggest economic benefit. Thank you so much for watching, and I'll see you in the next video.